welcome to tonight. Welcome to our FinTech Circle Investor Evening. And I'm really excited to see all of you here and all our startups. We're excited and look forward to present to our investors today. It will be an exciting evening because we've chosen our startups very well over the last few months to really choose a wide range of investment-worthy companies who are all looking for their growth capital, for their seed capital, to really go to market faster and grow their businesses. Before I go into detail, I just wanted to introduce myself. I am Suzanne Chisti. I am the CEO and the founder of FinTech Circle, and I'm delighted to see you all here. FinTech Circle, for those of you who are new to it, the reason why we are called Circle is because we have got three circles, in fact. So the inner circle is the one you are looking at now. This is our investor network, where we've got altogether almost 300 investors investing into fintech startups. Our middle circle is our corporate network, our partners such as Deloitte today, and also our editors of our 7 books. And our outer circle is our social media network. So when I started FinTech Circle 7 years ago, I remember we had no social media reach at all. Now we've got more than 260,000 people who follow FinTech Circle every day on LinkedIn, on Twitter, across social media. And what we do in our investment we try to find the best investment opportunities. That's our goal. These are a couple of examples of companies we have invested in over the last few years. 3 of them had a full exit already. So you can see one company was acquired by Compare the Market, the second one by Santander, the third one by Legal & General, and the third company, Cognizant, we decided only to do a partial exit because they're going so huge that they might become the next unicorn, and their focus is B2B sales. And so we just took a partial exit, but we still kept a stake inside the business. As I said before, we have written in overall 7 books already. The first book was the FinTech book, which was the first book on FinTech globally. It became a global bestseller, and it really started, to some extent, the FinTech educational movement as well. And our last book was on AI, on legal technology. And we were also asked by Wiley to do a book on FinTech for Dummies. So you might know the whole Dummy series. So we did one book on FinTech for Dummies for them. And what we do on a daily basis, we publish news from our FinTech portfolio companies, from experts in finance and FinTech about what are the latest trends. We are participating and we are running webinars, we're hosting webinars with FinTech thought leaders. We often organize VIP dinners, so VIP breakfasts, to really have a round table discussion, on certain topics when we want to go deeper and discuss in a small format. And we also publish thought leadership pieces, white papers. So we wrote one, for example, on data usage. And it's very interesting, because our industry uses more and more data because we use lots of AI. But of course, data usage often means we all rely more on AWS, on Microsoft Azure. And so it really depends where the electricity comes from, in terms of being sustainable and not to increase our carbon footprint significantly. So we talked about the linkage, from our sector into the sustainability sector to ensure that we have used green energy for our data centers, for example. And last but not least, we are producing FinTech films. Here we are co-producing the 4th film focused on equity and inclusion. I literally this Friday, in fact, I'm in the studio here at ITN to be interviewed, and we're working with 6-7 other companies who will tell their story, which will then be premiered in December at FinTech Connect, which is a large leading FinTech conference. At FinTech Connect, we will show for the first time our new film, and we will also, of course, publish it on our website and online. So I would like to thank our partner Deloitte. Since many years we have chosen to work with Deloitte as a consulting company, as a legal practice, because Deloitte offers lots of things which fintechs and scale-ups need. And so it's like almost one company does everything. You know, it's like an all-in-one shop, you know, for our fintech companies who we are working with. And I would like to introduce Matt, specifically Matt Clark. Matt is financial services partner responsible for tax at Deloitte. And Matt offered today to give us a 5-minute overview of what the impact will be to our sector, to our tax sector, if we get a new Labour government. So we're looking now into the future. Matt, please join me on stage.
Thank you. Can I just check, is that one working instead? Oh. Good evening, everyone. As Suzanne said, my name's Matt Clark. I'm a corporate tax partner here at Deloitte. I lead our FinTech, payments and digital asset tax practice in the UK. We provide advice and support for a wide range of fintechs based here in the UK, but globally as well. And contrary to popular belief, we do work with a lot of early stage startups, but also right through to listed groups as well. Now, with I wrote this on Friday, with a general election expected next year and the opinion polls currently pointing towards a possible Labour government, we'll see what the events of today do in terms of impact. I thought I'd take the opportunity to just say a few words on what we might hope or expect to see in the world of tax and other areas for fintechs if we do indeed, or when we get a new government. So whilst Labour have made a number of statements on various policy changes, I think it's fair to say that they haven't really yet given much specific focus to financial services as a sector. Tulip Siddiq, who's the Shadow FS Minister, has talked positively about the potential of fintech and is working on a review to develop their offer around financial services more broadly. But whilst in general the party has done a lot already to position itself as more business friendly, what they haven't done is put FS front and centre of their economic and business policies thus far. In terms of what we do know, they have been clear that some of their areas of priority include abolishing the non-dom tax status, changing the tax treatment of carried interest, so it's no longer treated as capital but would be taxed as income. Investment allowances work best alongside the current rate of corporation tax to promote growth, and that's as part of a wider review of the business tax regime that they've talked about. And then finally, they've made clear thus far that they have no ambition at the moment to raise CGT rates, which hopefully is good news for everyone in this room. When it comes to startups and scale-ups, we know that Rachel Reeves commissioned a startup review which generated a number of recommendations on policy, including maintaining and building on existing incentives like EIS, SEIS, and the R&D tax credit system to try and ensure that investors and firms have the best possible incentives for growth. So whilst there are a number of recommendations and statements around reviews, and there will definitely be a fintech angle to wider policies in areas like skills, trade and innovation, there are currently very few stated policy proposals specific only to FS and fintechs. So here at Deloitte, we've been giving some thought to some of the areas which Labour, or indeed any incoming government, could focus on in order to reinvigorate the UK fintech sector and help it to maintain its strong global position in the face of current headwinds. So starting just for a few minutes away from tax, they might include developing a pro-innovation regulatory regime, providing fintech businesses with timely regulatory clarity, and certainty on the use of innovative technology, improving the speed and clarity of authorisation processes and streamlining what is required to be provided in an application. Currently, the perimeter guidance is very complex, and businesses often report the sense that goalposts are moved throughout that application process. Adjusting requirements around areas like ESG and financial reporting to ensure they're proportionate at a group to allow for efficiencies of compliance and operations. And then finally, seeking to ensure a level playing field on regulatory requirements in comparison to the rest of the world. And one example of this is around capital requirements, and something we hear from our fintech clients is that capital requirements in the UK are often greater than those in the US and Europe, and obviously that makes them more costly. Now, beyond the regulatory framework, there are also specific direct and indirect tax policy measures that could support the competitiveness of the UK's fintech sector. For direct tax, that could include, for example, revisiting the annual allowance around banking surcharge from its current level at £100 million. Now, I appreciate that only benefits a handful of entities in the sort of digital and challenger bank space. Some of those entities that are impacted are among the country's largest fintechs. Secondly, evolving the scope and operation of the R&D tax relief system in the UK to try and ensure that it supports investment and innovation and is clear to use and administer and provides real value for taxpayers' money. R&D tax and incentives is an area where there have been a number of recent changes and we're expecting more to follow. The government's currently consulting on a new single merged R&D scheme, combining the current RDEC system with the SME scheme into a single scheme, largely modelled on RDEC. And the increase in the headline rates of benefits for large companies from 13 to 20% is obviously very welcome in terms of encouraging investment in innovation for large companies. But for SME claimants, which obviously includes many fintechs, the rates of relief have been reduced significantly from 1 April this year, and many will now receive less benefit for each pound of qualifying R&D spend they incur, which clearly limits the benefit from a potentially valuable cash tax incentive. The next area will be around capital inflows and considering further tax breaks to encourage more capital inflow to support startups. And as the UK really lags behind the US in respect to availability. And this funding could be drawn from institutional and retail investors as well as from large corporates. On the indirect side, updates to VAT legislation and case law are needed to ensure that they properly adapt to the advent of new technology and regulatory advancements in FS markets. I think the current regime's really led to confusion and uncertainty in supply chains across numerous areas, including payments, wealth tech and digital assets, particularly where activities might be outsourced. The UK has a real opportunity right now to become a global leader in indirect tax policy in this area, if it can provide this emerging sector with greater clarity and certainty with well-drafted changes to FS VAT law that identifies the UK as a promoter and incubator of fintechs. And some of those changes could include redefining the scope of the payment services exemption, creating a framework for the taxation of digital assets that's fair and reasonable, clarifying the scope of electronically supplied services, and finally, recognising the use of outsourcing both within multinational groups and with third parties to try and provide some legislative certainty on the scope of taxation in those circumstances in a manner that supports and encourages investment in the UK. And then finally, access to technical talent, such as attracting IT engineering skills. And that remains a critical challenge for the fintech sector here. And the long-term goal should, I'm sure we'd all agree, be ensuring that the UK is developing a workforce with the required skills. But in the near term, creating a favourable visa regime for candidates with the right education and work experience, plus incentivising employers to provide technical training for employees can play a key role. So in closing, whilst fintech has been facing a number of challenges globally, and particularly in the UK, I think we can all agree we've got a brilliant fintech ecosystem here in the UK, which is the envy of many countries in the world. Tax, regulation and talent are all key ingredients in that ecosystem, and our government, whoever that might be, has a critical role to play in all of those areas to ensure we remain at the forefront of global investment and innovation. So I think we can all say we wait with bated breath to see how government, whoever that is, action. Thank you.
Thank you very much, Matt. Excellent speech on a very important topic, I think, which is important to all of us because we all want that the UK stays the global fintech hub because we'll benefit, all of us in this room. So what I would like to do now is to show you now who is coming next. So we have chosen, as I told you, 6 startups, And those 6 startups present to you now for 7 minutes each. So it's a very difficult task because we've given them 7 minutes each, followed by about 7 minutes Q&A. So everybody's got 50 minutes in total to explain their company, their investment proposition. And afterwards, we want you to choose which ones you like to invest in, which one. And by doing that, please now use your phone to download this QR code. Because in the QR code you can give feedback. You can say yes, you like the startup, or you don't like it, or you want more information, or you want to have a meeting with the CEO. You know, you can literally document it in the questionnaire. So this will be for the whole evening. It's the same QR code where you can respond. And with that said, I would like now to invite the first startup on the stage, Daniel Herman. Daniel, over to you.
Great, thanks, Suzanne. Hi everyone, thanks for coming out. I'm Dan, I'm the co-founder of an investment platform called Dark Square. And what we do is we allow individual retail investors to invest in alternative assets that would previously have been out of reach. So we look at things like private and alternative credit, renewable energy projects like wind and solar farms, hedge funds, real estate, distressed debt, commercial forestry, and more. And the 3 problems that we're really solving for, firstly, is that investors lack options right now when it comes to personal investment. They're pretty much limited to only investing in stocks, ETFs, and I guess crypto on top. Secondly, understanding alternative investments can be difficult. So even if you've got the capital, and it's not necessarily that easy to actually understand and learn more about them. And lastly, this leads to a lack of diversification in individuals' investment portfolios. Individuals are too exposed right now to equities, and this lack of options kind of leads to more risk across a portfolio as a result. So what we've built is an investment platform that allows access, understanding, and allows investors to diversify their portfolios. So we've built an end-to-end solution that handles onboarding, KYC, investment research, through to fund transfer and ongoing kind of investment management and distribution of cash flows, things like that. So market size, I think there's 2 ways of looking at this. Firstly, if we look at it from a top-down point of view here in the UK households have close to 1.1 trillion pounds invested in equities and investment trusts. That's not including pensions, actual cash on hand. And from the bottom up, the UK is home to close to 3 million millionaires here, and the 6 million people earn over 120k in the UK. So our target in the middle there is to get to 100 million in volumes in year 3. So we're targeting 10,000 users with an average annual investment of 10k gets us to that 100 million figure. So the product, what we've actually built is an investment platform. So customers can browse investments, learn more about them. We pull together a 1 to 2 page investment memo on every single asset on our site. For example, we went live over summer in beta. We closed our first deal, which was a senior secured private credit deal with a consumer loans company called Plend, yielding about 10.5%, and we were locked up for 2 to 5 years in that one. We are going fully live in around 2 weeks' time, actually, with our next 2 investment offerings. That would be a 500 million AUM distressed credit hedge fund looking to yield 18 to 20% per annum on that one, and also a 100 million AUM residential property development fund that's looking to yield about 12 to 15%. So how do we actually make money off this? So we've got 2 revenue streams that are online right now. First of all, we charge a 1% upfront fee to our customers, and then we charge a 1% annual fee. That 1% annual fee, we actually take as payment in kind, so co-investment. So we basically take 1% asset ownership for every year that it's outstanding for. We like this because it aligns our incentives with those of our customers. Like, we've got some skin in the game. The more money our customers make, the more money we make, and we're not incentivized to list anything that goes to zero because we just won't get paid on that. And then secondly, we typically target a 3 to 5% spread. So we might buy into an asset for 480k, list it for 500k, something like that, and take the difference. And then our third revenue stream, which we're hoping to bring online in around 12 months' time, will be linked to a secondary market. So we want to allow our customers to buy into and sell out of assets that have already funded, and we'd be able to charge trading fees of up to 2% on each side of those. So timeline, we've now got over 700 unique vetted waitlist members, mostly from the UK. We went live in beta to just 150 of those, and we've got £3 to £9 million for our first year, for our first few deals. we've got a strong investment pipeline of about 6 to 8 deals, 2 of which I mentioned previously. We've got another sort of few in the pipeline from those asset classes I mentioned on the first slide. And we're FCA regulated via a company called Delio. So we're now in November. We timed this pretty well actually because we're going live in about 2 weeks' time. We closed our first ever fundraising round, an angel round of 300K earlier in this year in March. That was from about 17 angels through SCAS and EIS. And in terms of competitors, this is kind of the area that we want to occupy. I'm sure you recognize a lot of the names on the sort of far left of the graph in the traditional equity market, but we're kind of looking to span across debt products and alternatives. I think Yield Street as a company are the most similar to what we do. They're US only at the moment. They've done about 4 billion in volume since their launch in 2015, 2016, and have around 350,000 users. You might also have heard of Moonfair. They allow individual investors to invest directly in private equity. Their minimums are a bit higher than ours, so theirs are about 100, 150K, whereas ours are 5K, so ours are a bit more accessible and targeting a wider audience. And lastly, brings me onto the team. So I'm Dan, co-founder. My background's in distressed credit trading. So I was a credit trader at RBS for a number of years, trading bonds, loans, unlisted equity, some CDS as well. Before that was in investment banking, originating bonds. So mostly in the fixed income space. My co-founder, Alex, who's our CTO, he's a full stack software engineer, got about 12 years experience across the board. But he's also experienced in financial services. So he was an algo trader at various hedge funds, including AHL Man Group, and then more recently worked at a boutique investment bank called Elantra for a couple of years. And then thirdly, we added Renata to the team about a year ago. She's helping us out with growth and marketing. She was at Skyscanner for about 5 years, the flight comparison website, and then more recently at Freetrade, the stock broking app based in the UK. So about 8 to 9 years of UK tech and more recently FinTech experience there. I will leave it at that. So if you do have any questions, please let me know. Great, thank you.
Wonderful, Daniel. Thank you very much. So now we open up for questions. So who's got a question for Daniel? Just raise your hands and I come with a microphone. Yes, please.
How do you select what to put on your platform in terms of investment opportunities?
Yeah, good question. So right now it's all in-house, so it's kind of myself, Alex, and Renata looking at deals. In terms of deal flow, we're looking to do about 10 to 15 a year at the moment, so around 1 a month. So we're not chasing hundreds of deals, which we like, because it lets us be more selective. We can kind of target investments that we like. The first thing that we look at is their downside protection, because we're very focused on kind of capital preservation, and we're trying to offer our investors relatively low risk investment opportunities. But yeah, it's sourced in-house at the moment. With the funds we're hoping to raise, we're going to hire one kind of investment scout, investment analyst to help out with deal flow, but we're not in a position where we're chasing kind of hundreds or thousands of deals a year, so it kind of makes that process a little bit easier.
Great. Yes, please, Tafash.
What's the average funds? Why this
Yeah, good question. So we target minimum is 100 million AUM. Max that we're looking at the moment is about up to 1 billion, so in kind of that range. So yeah, we target retail customers, but the caveat is we only target high net worth and sophisticated investors. So our minimum ticket on the platform is 5K, so we're not targeting mass retail, I guess the general population. And for the funds we've spoken to, I guess they want to give more people the opportunity to invest in them. We think they're going to generate some positive PR around this. And yeah, it's just getting more people involved in their opportunities. We're starting small, so we're looking to raise about $1 million for our distressed fund that's going live. But longer term, we're hoping to be able to do more than that. So we're actually hoping to be able to write meaningful checks to some of these asset managers that are kind of in the 500 million AUM space.
That's great. Yes, please.
How do you match investors and funds that you work with regulatory perspective? So that markets.
Yeah, so we have quite a strict onboarding process. So every customer, before they're even allowed to view any deals on our site, has to go through a suitability check. So we have to make sure you're either high net worth or sophisticated, as in you have the understanding that these products are liquid. You're not necessarily able to get your capital back before the term is up. So that might be 2 to 5 years in certain cases. And then investors can select what they'd like to look at as well. So as part of the onboarding process, they can say, I want to look at real estate, or I want to look at credit, or I want to look at forestry or renewables, that kind of thing. So they basically choose which assets they want to look at. But as I said, we're looking at doing about 10 to 15 per year, so people can kind of look at everything, and they're not going to be trawling through hundreds of deals, for example.
It's just the UK investors.
We have a few, we've targeted the UK, we've got regulatory permissions to target all of Europe. So we've got a few sort of Swiss, Germans, a few French people on the site. It's mostly the UK, I'd say probably 85% is UK based, but we have a few European customers on there as well.
Excellent. One final question. Yes, please.
Are you aggregating the investors?
Yeah, exactly. So the way we structure it is we set up an SPV, sort of pool all the investment in that SPV, which then owns the asset, and then we allocate shares in that privately listed company to our own customers. So we're not tokenizing using NFTs, for example, which some other companies do. We think, SPVs with legally backed shares are kind of a more tried and tested process, and we want there to be that trust from our customers in what we're doing.
And what will the investment be?
So it's £5,000 per individual, and then rough deal size we're looking at is around 500k to 2 million. So yeah, you need about 100 customers at the low end to a few more at the high end.
Perfect, Daniel. Thank you very much.
Great,
Well
thank you.
done. So now I will go and show you the QR code again. And please, if you can now select for Daniel and for Dark Square what your response is. And in the meantime, I asked Vishnu from India, who is currently in India, and our next speaker, to connect on stage so that he can connect his line on stage. But you can choose now on the QR code, would you like to meet Daniel in person? Do you like to get more information on the company? Or is it not of interest? So just make your choice for our first presenter. And in the meantime, I ask our second presenter to join us on screen from India at the moment. I know Arthur in the background, probably he connects us and Will now. So we've got Vishnu joining us now. Wonderful. Vishnu, welcome to our FinTech Circle Invest Network. You're in India at the moment. Vishnu is the CEO of Asan Will. So we'll hand over to Vishnu now for a second pitch.
Thank you, Susan. Good evening, everyone. I'm Vishnu from Asan Will. Asan Will in Hindi means easy will. So we've used a combination. 5 years ago, my uncle passed away without a will and testament, and I saw the amount of pain that our family had to go through to figure out what all his assets were. And eventually it led to an ugly dispute during their distribution. At Asan Will, our mission is to make intergenerational wealth transfer easy by leveraging technology. There are essentially three aspects to fintech: wealth creation, wealth management, and of course, wealth transfer. Most of us tend to focus on the first two pillars, wealth creation and wealth management. Wealth transfer remains a huge blind spot. Unfortunately, as humans, we don't like to contemplate our own mortality. The biggest exit of all is, whether we like to admit it or not, is the exit from this life. That is precisely where we are seeing a huge problem brewing in India. Billions of pounds of wealth is currently unclaimed. As of 2020, it was over $6 billion because family members had absolutely no idea about the investments of their kin. And this number is growing at double-digit CAGR. And the worst part is over 1.5 million court cases are currently pending, and it takes several months to years to acquire your own family's assets. Succession planning remains hugely underpenetrated in India. As you can see, it is fully offline, time-consuming, and expensive. Asan Will is India's favorite end-to-end digital will writing platform. I'm showing you what a real will looks like. Very much like the English law, India mimics itself after the common law of the UK. So you need to print it and sign it in vetting. And Asan Will offers registration, notarization. It's a huge differentiator from the competition. Just to let you know a little bit of the the reality when it comes to the succession planning law in India, women, for example, are significantly disadvantaged. When a Hindu married man dies without a will, the mother of the man at least gets 1/3 of his total estate. Whereas when a Hindu married woman passes away without a will, her parents do not get anything. The underlying assumption here is that the woman belongs to the family of the man, or she becomes part of the wider chattel. Unfortunately, the current laws do not necessarily cater to millions of Indians. For example, LGBTQ cohabiting couples do not have the same rights as heterosexual married partners, and the social fabric of India is now changing. We are going after a $4 billion market that is growing at 30% CAGR rapidly. Just to put this in comparison, in the US, it's around 35% of penetration, whereas in India, it's less than 3%. From a market perspective, I think it's excellent timing. India is poised to be the world's third largest economy in the next decade, decade and a half. So you can already imagine the quantum of wealth transfer that might happen. So we are entering it at the right time. And wonderfully, we have multiple revenue lines. So it's not just the first time transaction fee, but it's also offering executorship as a service where we keep a percentage of the entire estate and, of course, storage of the document and other upsell products. We're beginning to see good, healthy unit economics already with an LTV to CAC ratio of approximately 6 to 8. And I'm happy to inform you that we've already got over 12,000 signups in just 2023. We are on track to being the single largest brand in India. We've got customers in over 80 cities with over 200 five-star reviews, secured 200,000 leads through B2B partnerships. In fact, I'm happy to say we have customers in Deloitte, India. So all your Deloitte colleagues in Hyderabad, that is where we have an office. So some of them are our customers. And of course, other technology companies in India are offering Asanville as an employee benefit, which makes sense in the broad scheme of things. We've already secured a media for equity deal with Times of India, one of India's most respected media houses. And those ad campaigns are now gone live with good traction. I'm happy to inform you that we won Tim Draper's Shark Tank, the most recent season. And Tim, as you know, is an investor in Tesla, SpaceX, Skype, among other things. We are essentially building a data company. Wills obviously are just the beginning. They give us an opportunity to understand the big picture. What is the overall portfolio of an individual, both physical and digital assets, which then enables us to offer them suitable products throughout their lifetime. So embedded finance. Of course, one demand from the market has been estate settlement. So people are asking if Asanville can be the executor ourselves. I'm proud to be part of an excellent team with proven expertise in law, technology, and finance. Prior to Asanville, I was head of new products at Wonga. I was one of the early employees there. And before that, with Bain & Company. I read nanotechnology at Cambridge and did my MBA at London Business School. We're backed by a lovely set of investors, one of whom is actually here today, this evening. So Neele, please say hello to him if you are interested in our story and our journey. We're also backed by Techstars. From an ask perspective, we've hit our initial funding target. So we've decided to expand the round a little bit and essentially are looking for investors that are optimistic about the UK-India relationship, the growth story of India, and of course, believe in the potential of legal tech. And I know no pitch is incomplete without generative AI. There, I said it. But most importantly, it is the data that is the underlying pillar. So once you have the data, you can do some useful things with it. Happy to be supported by a wonderful set of London and the UK-India corridor networks. So in summary, we are solving a real customer pain point, which is using technology to disrupt an old school industry in a rapidly growing market with good unit economic potential, and most importantly, building a data company that can serve not just the Indian residents, but the diaspora who are in multiple countries, including the UK. Thank you so much for your time. I look forward to your questions now.
Thank you very much, Vishnu. Excellent presentation. So let me open up for questions. And maybe what I do is I just ask the one investor who is here, who is invested already in Vishnu. Who is? Can you just? Yes, please. Would you mind just to explain maybe why you invested in the company and how, you know, what your thoughts are?
Right. Well, I mean, Vishnu has said it should probably be better than certainly know that. First and foremost, I think that's the match up. Great experience and really focused on solving social challenge and creating social capital in the country. And underlying short version of this is a very nice beachhead to a fantastic opportunity, which is data at its core. That's absolutely data, very really data here. Makes it all very
Excellent. Thank you very much. Very good. Helpful. Yes. Any questions for Vishnu? Yes, please, Carol.
Maybe I need the mic to hear me. Thank you, Vishnu. Great presentation. Can you talk to me a little about your current traction and use of funds and how quickly you expect this business to grow over the next few years?
So let me just go straight to the roadmap slide. So at the moment, we are the largest brand in the country from a sign-up perspective. We've, as I mentioned earlier, we've got over 12,000 signups. The goal for the first year is essentially to try and get to 2,500 wills written. And at the moment, we are seeing somewhere between 10 to 15% conversion from signups to wills completed. Because we have to nudge people. It takes them around 15 minutes to finish the first information supply. Our goal is actually to start to get to the 25,000 bill territory. We have, from the Times of India, a term sheet for $5 million broken down into two tranches, $1 million at the current valuation and $4 million at whatever our next round's valuation is. And I think Times is a phenomenal partner because we now do front page ads and television ads, which is how this conversation is now beginning to start in the country. Unfortunately, most people pre-COVID were totally oblivious to mortality. So we are almost spearheading this conversation about, hey, let's talk about wealth transfer. Indians especially are susceptible to diabetes and heart attacks and other metabolic conditions. Beyond that, what we want to do is we want to get into other adjacent products which are still legal, so not completely outside of our core. For example, estate settlement. I see a huge opportunity there, especially as Indians are accumulating more and more wealth. The next few millionaires and billionaires will be coming from here, and they will certainly get older. Right now, we're a slightly younger country. So that's the direction of travel. And if you're lucky, we'll potentially ask for a life insurance distributorship license once we have enough volume, and then maybe we can offer an add-on product to get a deeper share of wallet. But that's roughly the game plan.
Great. Vishnu, yes. One more question, yes, please.
Thank you. I'm intrigued by your number there, the 25,000, given the scale of the population, feels like quite a small number. And then the number disappears in the future. What's your ultimate ambition? What's the?
I think the 25,000 is the wills completed. So which means the total number of wills started would probably be 10 times higher. And what I've noticed is we also want to be very realistic with respect to our expectations. We are obviously pioneering the beginning of this conversation. And as you know, the toughest thing that a startup cannot control is changing consumer behavior. So in theory, yes, it only takes 15 minutes to write a will with us, but you still need to be comfortable having this conversation with your loved ones. And that is why we are, based on real learnings, we've identified a bunch of target customer segments where the urgency to write a will is higher. For example, terminally ill patients. they have a certain runway in their mind, and therefore they cannot procrastinate doing a succession plan. Similarly, high-risk segments such as LGBTQ or cohabiting couples. India is a nation of diverse faiths. We also have interfaith couples. Unfortunately, the current law it cannot cater to all of these nuances and use cases. So what we've learned is go from the high risk, high urgency segment. And then if we definitely exceed the 25,000, which I agree with you, it's small, we should do it. But at the same time, we wanted to rather err on the side of being conservative as opposed to being overly optimistic.
Thank you.
Excellent, Vishnu. Thank you very much for calling in from India at the moment, and we look forward to seeing you back in London. So thank you very much to our second startup. So now I would like to invite Damien on stage. Damien is the CEO of Custom Credit, our third startup, which we're going to pitch now.
Yeah.
Yes, and actually before just handing over, if you could fill out, you could just scan the QR code and also submit for Vishnu, how you would like to proceed with his application. One option is to say yes, you would like to see Vishnu meet him one-to-one. One option would be to just get more information, on the company. So you can choose your choice. And now I hand over to Damien, CEO of Custom Credit.
Thank you, everybody. So I'm Damien Burke, CEO and founder of Custom Credit. I've had 24 years experience in financial services, primarily in credit risk and lending. I'm an approved person with the FCA, so SMF 1 and 3. And I'm here to tell you about Custom Credit. 22 with a consumer lending license, and we've been revenue generating since June 23. Okay, so what's the problem? So traditional lenders have an abundance of data which they really do not use. This is particularly with regards to initial affordability assessments and ongoing assessment of both affordability and credit risk. Where they do try and use data, there's a massive lack of understanding. So one of the examples I've given before is where effectively a lender I was working for as a consultant was trying to identify income shock through COVID. But they didn't understand that the data they were using actually was designed to even out what that income pattern looked like. So effectively create a good average. There's a lack of flexibility in term structure. So even if they did understand that affordability changes over time, they don't do anything about it. Classic example here is a customer that earns overtime 10 months of the year. And because of the averages that are used in the affordability assessment, effectively they're given a loan which they can't afford 2 months of the year. And immediately they go into arrears, they get higher charges, they get higher interest, and it's a terrible customer experience. And what we believe is that that actually leads to customers that are not engaged and are also higher credit risk. So our mission. So we've got 3 mission statements here. The first is to become the most customer-centric fintech in the UK. Now that's an ambitious task or mission. And what I kind of like about it is, when do we ever know we've achieved that? Right, we've got to keep going. We've got to keep trying harder. One way we do this is to try and make sure our colleagues reflect our customers. So actually we're hiring from a more diverse group of individuals so that actually we understand what's going on in their lives and how they can relate to our customers. And we include them in the decision-making process. So actually they feed back because, as you might imagine, a lot of the decision makers in financial services firms aren't actually users of those products. The final mission statement is around literacy. So we want to encourage our customers to understand our loan product first of all, but then other products more generally. Again, we believe that leads to a situation where they are lower credit risk, they understand and they're more engaged with the product. So we give them information about their open banking data, for example, and their own personal affordability trends throughout the life, to try and help them stay with us over time and actually keep coming back. You know, give a real positive experience of that, what that lending product can be. So we're here today to ask to raise a portion, at least, of £2 million. I'm very lucky that we've been able to raise nearly £1 million so far. And also lucky that, you know, the investment group that I've got are very supportive, and one of them's here today. We're going to use those funds primarily to cover operational costs and also contribution towards lending. So we've currently got 350k of secured committed facilities for debt funding, and they obviously come with advance rates. So we need equity to cover that. We've also got another 1.7 of effectively uncommitted facility that we've already confirmed with that lender. And we have a letter of intent from a bank for 11.5 million euros. So you can quickly see where that money goes in terms of funding our plan. And that plan covers the next 9 months. What we've used the money for so far, you can see a breakdown of below, but what's probably significant is that there's around 30% of that which is pure R&D, which we've done now, right? So most of the money now goes towards actually growing the business. Okay, so a bit about the product. Why is it different? So when we calculate the customer's affordability, we actually create a normal monthly payment, which all other lenders do, but we also create a flex low and a flex max, and that forms part of the customer's terms and conditions. The flex low is effectively to be used when they're a bit short, which will happen in some months, and the flex low is effectively to help them catch up, right? So we communicate with the customer regularly about what the flex low is going to cost them, because it will cost them a small amount of additional interest, because it's all based on current outstanding balance. And we advise them when they have that additional cash to pay their flex max and what that will actually save them in terms of money. Because the flex low and the flex max are part of their terms and conditions, first of all, they don't go into arrears if they use the flex low. And because we've created or co-created or implemented a variable recurring payment structure, we don't actually have to ask them for further consent. They agree at the start to pay between that flex low and that flex max. Here are our growth plans. So what does it look like for custom credit? I'd say this is fairly conservative. If you listen to other lenders in our sector, they'll have much more ambitious growth plans. But the reason we've done this is really because we want to test and learn. Go slow before we're into BAU and real strong growth. And that's reflected here. So we're targeting for around 20 million in our first 12 months. I mentioned the funding facilities talking about at the moment. They cover the first 9 months of that. By the end of year 5, we're looking around 280 million in terms of a loan book. We believe that the reason the way to go about this really is to make sure that we have a well-controlled book, because it helps with funding and further raises if necessary. Market outlook, so 21 million adults in the UK have personal loans, and 12.9 have low financial resilience. So that means that they're the sorts of people that do have a lot of exposure to overtime and bonuses and that sort of thing. Now, to achieve the success on the previous slide, we actually need 0.3% of the market share by volume and 0.5% by value. So easily achievable in terms of the current market.
Perfect. So thank you very much, Damien, for the great presentation. So let's open up to questions. So who's got a question for? Yes, please, Claire.
Thanks very much, great presentation. 2 questions really. Are interest rates fixed or floating? And what is the impairment looking like on the books so far?
So our interest rate is fixed. The impairment is 0 at the moment. We've only got 10 loans out the door. and that is part of our slow growth plan. If I'm honest, we want it to be further along, but unfortunately the aggregator that we integrated with first of all doesn't really cross over in terms of our credit risk. Now, I've been in the other side of this, where I've been part of a lender through a consultancy, where they've got a lot of money and they've tried to get out the door quickly to try and hit those targets, and it always ends badly. So we're trying to make sure that we develop our time, or focus our time on development of the right aggregator relationships and making sure that the through-door population meets our overall risk profile.
Perfect, yes. Second question. Is there another question for Damien? Yes, please.
Hi. Can you please speak up? What's your target customer profile and what's your distribution of consumers?
Okay, so the target profile is quite broad. We are looking at near-prime lending, so typically our customers will have a experience score of 721 and above, and effectively are a fair credit rating. Typically the interest rates are below 29%, we're currently tracking at 24.9, so that will tell its own story around the kind of risk profile. Where we believe that the customers will really find the value in this is, as I say, those customers that have bonus or overtime as a heavy component of their salary. There are, as I say, from the FCA's own surveys, there are around 13 million customers in the UK that fit that sort of profile where they have a regular income. And as I said, the market potential far outweighs our ambition in terms of covering it.
Good response. So, final question. Maybe to ask your investor, I think, why did you invest in Damien, in custom credit, and are you following on in this round?
So I've known Damien a long time, so I guess that helps. Why custom credit? I guess my background is in financial services consultancy for credit risk. I've seen a lot of lenders, and it's surprising stroke depressing how generic the lending proposition is. They're all like loads of sliced bread, they're all the same with different value. And this is actually a different product. It's not crazily different, it's not overly complex to understand what's going on, but it's a variation, it's a configuration that allows some bespokeness to the customer's actual need rather than just being a repeat. Yes, I am following.
Thank you. So thank you very much, Damien.
Thank you, everyone.
And again, please scan the QR code. And in the QR code, you can provide feedback on Damien's presentation and your interest in Damien's company. And now we're moving on to our fourth startup, which is led by Nabila. Nabila is the CEO of AML. And I hand over Nabila now to your presentation.
Thank you. I'm honored today to present my revenue-generating software as a service regulatory tech business. I've been in anti-money laundering compliance for almost a decade, and every year since, I've seen the same problem. The anti-money laundering compliance spend is increasing. It's increasing largely due to inefficient processes. Processes that are made worse by multiple tech vendors that don't speak to each other, that are not made to work together, which leads to a lack of usable and insightful data. Data that you can't use to make your processes better or more efficient, leading to costly processes. So the solution that we're building at RAML is a one-stop solution for anti-money laundering compliance in a single place. We've looked at laws, regulations, and industry guidance, and AML compliance is comprised of 8 modules, 3 of which we've built already, and the remaining 5 which we are currently building. See, before RAML, you would have, as a regulated business, all the compliance teams that I was part of in my career. You would have consultants like Deloitte or a consultancy that I worked for. You would have lawyers like the law firm I used to work for, and Norton Rose as their global anti-money laundering expert. And what did we advise as consultants and lawyers? That you need at least 3 tech providers, if not upwards of 7. With RAML, we're changing that. We're creating one centralized platform that acts as a co-pilot to significantly reduce internal teams, significantly reduce need for lawyers and consultants, and only one tech platform, RAML. RAML is designed at its heart to work together to get the right data flowing around and to give you data that you can use to make your processes better and your risk exposure lower, leading to cost efficiencies. We are serving a very specific market, and that's what we're calling the underserved market in RegTech. All the big RegTechs are ignoring fintechs, which in Europe alone are valued at 430 billion, and if we capture just 1%, which we will, it looks at 2.25 billion. So we launched our product in May of this year, and since then, we're at £35,000 of annual recurring revenue. We're 100% month-on-month growth. We've got an active pipeline, including enterprise fintechs, and with building the entire product through pre-orders and pre-interest, we're already showing a 4 to 7 times average revenue per user increase. So as I've been speaking, I'm sure every person in here who's been in financial services has thought of another RegTech that does AML. Maybe you've thought of Comply Advantage, Napier, Clause Match, or another that I've definitely heard of. I'm not ignoring them, I'm not denying them, I'm saying they exist, but the reason that they all exist, the reason that you're all thinking of a different RegTech provider is exactly the reason why we need RAML. Because a one-stop solution doesn't exist in the UK. A one-stop solution doesn't exist in the UK, despite there being an underserved market that needs compliance. A one-stop solution doesn't exist in the UK, despite the fintech screaming to just be able to comply. They don't want to be best of breed. They don't want to be best in class. They just want to comply. There's no one-stop solution, despite all of the incumbents trying to extend out. You see your Comply Advantage moving further and further, but because of their scrambled tech stacks, they're largely known for one thing, they're unable to do it. And also, a one-stop solution doesn't exist despite the regulators in the UK and Europe championing a risk-based approach. And if you don't know what that is, it essentially means that context is king and data is super important when making regulatory decisions. And without data and without free flowing of information, a risk-based approach is impossible. So I've spoken about myself throughout the presentation, and just to confirm, I am one of the UK's foremost anti-money laundering experts. But I'm working with James Ninnis, who's been a decade of experience in building software applications that are resilient and scalable, both greenfield and also scaling up legacy systems. And we're backed by Techstars London. We're raising £500,000 at a valuation of 4 million with SCIS and EIS eligibility. This pre-seed funding will take us to 500k in annual recurring revenue. We'll build version 1 of all the 8 modules, and we'll have an 18-month runway. Thank you so much. You can use the QR code to schedule a meeting with me, and I look forward to your questions.
Fantastic, Nabila.
Thank
you very much. So let's open up for questions for Nabila. Who wants to ask the first one? Yes, please.
AML compliance requirements tend to differ depending on what products you offer, what clients you market target. You seem to be one for everyone. Do you tailor your solution somehow depending on who you're dealing with? How does this work?
Yes. So thank you for your question. Indeed, AML compliance requirements do change, but very slightly. And we do have algorithms in the back which can be tailored based on the business that is buying the product. So we do have tailoring, which is possible.
Yes. Second one, yes, please.
What go bit on the side of things in the compliance documents is also how you mentioned about multiple technologies. Could you explain which technologies you, not technology itself, but which aspects of AML, KYC, KYC, ID verification, sanction check, ongoing monitoring of transactions. AML is a very broad thing, and I want to understand what specific direction. You being a former compliance officer, I see that you're shaking your head as well.
Yes, so thank you.
Understand these aspects, please.
Yeah, thank you for your question. So in terms of what we are targeting in relation to anti-money laundering compliance, so we are doing all of these 8 modules that you can see on the screen. So what you've mentioned is KYC. So within the KYC, I won't go too technical, but we do have e-identification and verification. But essentially, it's all these aspects. These are the core aspects as per the FATF Financial Action Task Force, which is the intergovernmental body requirements, and also UK and European regulations. So we have found a way to automate all of these 8 aspects using different types of technologies, including, of course, generative AI, but others as well.
Great. One more question. We've got time. Yes, please.
You mentioned there was no one-stop shop solution in the UK. Does one-stop shop exist outside of the US or in the jurisdiction?
Yes. Yeah, so in short, there are one-stop solutions in the US. One specific one-stop solution that we are most equivalent to is Themis. So Themis is in the US. They are not focusing on anti-money laundering compliance, but rather general compliance. So that's how we differ. And they are very focused on the US, so don't show any signs of coming into the UK or European market anytime soon.
Great. One final one. Yes, Tavraj.
Thank you. So we would never assume liability of their compliance because that's impossible. They will always remain liable. However, we do have insurance and other protections in order to make sure that if there was ever an instance, we would be able to cover ourselves. Thank you.
Thank you very much.
Thank you so much.
So now we've got 2 more startups before we go out and have more drinks. So the first startup now we're moving into the capital market space, into debt capital markets, so a very specific area. I look forward to invite Sotiris to join me on stage. And just before Sotiris starts, I would just like to go back to AML's QR code, just to make sure that you can give feedback also to Nabila, and indicate your interest in Rummel. If you like to invest, or if you like more information, you can just complete it. And what happens, just to let you know, this QR code has got 2 benefits. One is it gives feedback to our startups, which they really appreciate your feedback. Number 2, it gives you a record who presented today, because you get a copy of this email sent to your own inbox. And number 3, it gives us also feedback in terms of event. You know how you like the event overall. So it's really important to please complete the questionnaire. So with that, I'd like to hand over now to FinSmart, Sotiris.
Thank you very much. Thanks, Suzanne. Thank you very much. My name is Sotiris Manderis. I'm the CEO of FinSmart. I'm here with my co-founder, Guillaume Petigat. Our mission is to transform debt capital markets by delivering data-led digital solutions for banks, issuers, and investors. A few numbers about debt capital markets. I'm not sure how many people understand or know or have some experience. Debt capital markets is a very important part of our economy. It's where the corporates and financial institutions will go and borrow money, issue bonds. You can see $5 trillion worth of bonds issued on an annual basis, 35,000 transactions. These are numbers from Bloomberg, by the way. We have more than 400 banks involved and more than 4,000 issuers active on an annual basis. These are numbers, this market is quite stable. These numbers are on average for the past 3 years. So, interest rates go up, inflation goes up, companies still need to go and borrow money, still need to go and issue bonds. So these numbers are pretty much stable, whatever happens in the economy. You would expect that a market like that would be super automated. Actually, what you have is more that kind of image, still pen and paper, manual processes, data very fragmented, communication not where it should be, high risk and costly. What we want to do is we want to push this into the digital era where you have things automated, centralized, systematic. We believe when we can see the transformation in debt capital markets is vital. Why this is, just a few examples. The fees that the banks are making from the transactions, they're under pressure. They've lost 20% in the past 5 years. It's going actually down. They need to do something about their cost base. So they need to automate. They need to make better use of their data. The second thing is that the regulators coming in, looking at what they're doing, how they're doing it. It's an interesting number, 1.8 billion just for Q4 2023. I think it was 7 banks that got fined for using WhatsApp. Which means actually 2 things. First of all, that the banks and their clients need to communicate, but they don't have the tools in place to do that. Still very archaic in how they share their data. And the other thing is that we have tens of FTEs time wasted every year because they still share data through emails, sometimes on the phone, sometimes data gets lost. A bond transaction would look something like that. On the bank side, still pen and paper. I mean, you would be amazed to find that they still take notes on a piece of paper. The data, this data will never go anywhere, will never get aggregated. The data is lost. Constantly compiling data from spreadsheets. I think the analysts on the desk, their favorite pivot table, because this is what they do with spreadsheets. The time spent on actually compiling this data is really more spent on actually cleaning data, aggregating data, than evaluating the data. And a lot of manual processes. On the issue side, even the infrastructure is not there. 100% dependency on the banks. So, as you can see at the bottom, fees under pressure, talent and business attrition, insufficient data and fragmented comms. What do we need to do? We have a solution. Our solution is DealPro. DealPro actually is the platform, is the ecosystem that brings together the banks and the issuers. On the bank side, the data becomes much more systematic. Everything in one place. You have your data, you can access analytics in one click. On the issuer side, the infrastructure is there. You can communicate, you can compare, you can see the data live on when the deal is happening. So what we're trying to do is actually bring not only and automate the workflow, which is quite manual right now, but also systematize, if you want, the data and the analytics. And there's a lot of focus on AI right now, making sure we have generated insights for the bankers and the issuers as the deal happens, something that is not there right now. And at the same time, provide that in a very secure and robust manner. We have the right cloud infrastructure, and which is actually encrypted end-to-end. Why use DealPro? Because it's cheap, right? At less than 1% of the fees that the banks make per deal, we believe we can actually save for a top 20 bank up to 7 million a year. And we believe we can actually help them add to their deal flow by at least 15%. DealPro safeguards against all the regulatory problems that currently exist. We have our own monitor kind of chat for exchanging information between the banks and the issuers. And we have a lot of functionality that creates a much better relationship and it actually transforms the user experience. And the third thing is our data module that we actually released a couple of months ago that brings a few things together. Again, access to reliable data that the banks and the issuers haven't got yet. And actually analytics that give the bankers and the issuers a lot of contextual information that, again, is mainly over the phone or is actually over some kind of chat functionality. Guillaume, you want to go through this one?
Happy to. I'm the co-founder. We're very complementary. I used to run a DCM desk. Satiris used to run digital transformation. Why invest in FinSmart? Clearly, it's the key slide not to get wrong tonight. I think, firstly, our product is proven. We have one client. We have a second band that's imminent, fingers crossed, before the end of the year. It does take time, but we're getting there. And we have a third one who's ongoing with a trial. We do have a further sales funnel, but we don't want to put everything on the slide. These are the 3 concrete banks that we're targeting in the next quarters. Secondly, first mover advantage. We are on our niche, the only fintech out there. Doesn't mean that there are not other fintechs that are complementary upstream and downstream from us, but in what we do, in what we automate workflow and data, we are the only guys there. Founding team, it's a space, as people will know, when you know bankers are quite specific animals, not necessarily the one the people you want to talk to. In order to talk to them, you need to be from that space. You need to speak the language. You need to know when you call them, when they're upset, when they're in a good mood, when they're chatty, when they want a beer, or when they want to complain about their miserable lives. So therefore, we come from that space. We spent 60 years together with our advisors in that space. We know how to speak to them. We know how to understand them. That leads me to the next point, created network. It's a community. You need to be part of the community. People, we see our name and say, yes, we know you used to be at HSBC. We've done a deal together, if not directly, indirectly. We sort of speak, eye to eye and have this good trust. And I think trust is important in the banking world, considering, they generally are a little bit paranoid. Finally, we do have a strategic plan. We do know where we want to go with this business. We speak to the banks when we build our product. We speak to the banks when we're building it. And once we've built it, to make sure it matches their need, we know where we're going. We know what the new markets are. We don't have the time to expand on this, but happy on the Q&A.
And just to add to what Guillaume said, that the funding, the two of us plus our CTO have worked together for a number of years before actually we launched FinSmart. The last because we're pitching for investment, 500K to valuation of 6 million. This is under EIS. The investment is to actually help us expedite the onboarding of the client. So we'll actually add more functionality. We'll add on the technical and sales kind of team. And also we will launch Deal Pro for issuers, and we're planning to do that early next year. So what we're planning to have by end of next year is 6 banks live on the platform. And also with the issuer side of things, we want to have our first 10 issuers. This means actually 2 things. As you know, we're a B2B fintech, sales cycle longer than a B2C one, as we all know, but definitely on the issue side, onboarding of the product is much faster than on the banking side. So there's a little bit of hedge there, getting on the banking side, but also getting on the issue side, and the different commercials that happy to go in more detail on a one-to-one basis. 500K, we have 15% already committed. We're looking for the rest. Here's our contact details. Happy to answer any questions. Thank you very much.
Well done, both of you. So let's open up for questions. Who wants to ask the first one? Claire, please.
Thank you, great presentation. Can I just ask in terms of competitors, someone like a DealLogic, how does that fit in? And just if I could just have a second, in terms of things like blockchain and asset tokenization, how does this sort of fit into potentially a new world as well?
Thank you. Thank you very much for your question. There are some established kind of players in the market, DealLogic and iPrio, but they mainly actually look at league tables on the DealLogic side, and also they are on the equity capital markets, not so much on the debt capital markets. In debt capital markets, there's still a gap in terms of the fintechs operating there. There is a consortium of American banks, but looking onto the public side, not on the private side, that we're actually concentrating on our side. So there is complementarity in what is happening, and we believe that we can grow quite fast and complementing others in this kind of market. In terms of blockchain and tokenization, I don't know if anyone follows, but commercially we're not there yet. I think the hurdles that we see, they're more on the regulatory side, fragmentation on the legal side, especially within Europe, where digital assets are defined in different ways across the different kind of countries. We definitely support blockchain, but the banks, the syndicate and debt capital markets does need the solution now. So when you go and speak to them, they will tell you, blockchain, yeah, there's someone there to speak about it, about the future, but I need something now, and we offer a solution for the present. Thank you very much.
Great response. Another question. Yes, please, Tavraj.
Happy to address. I think on the bank side, yes, they like the magic sauce. Yes, they like to be opaque. We're not here to make it all transparent, marketplace, and have everything transparent to everyone. We're just here to take the recipe of the magic sauce from pen and paper to nice data onto our system, which is clear and easy for the bankers to use. So a lot of people would ask us, are you revolutionizing the industry? No, we're not. They don't want things to change black and white one day to the next. They want a platform to help them evolve step by step, which is what we're doing. So our clients are the banks. We know the language, we know what we sell to them, and we never face the, hold on, you're taking my job away, this is not what we want, you're making it transparent, we don't. We're here to help take away from a notebook, and I remember my boss having one of these big cupboards with hundreds of notebooks for every year, hiding in there, and he was very protective. He said, I did this deal 6 years ago. He turned the page and looked for the deal. Bring it onto a platform, analyze it, workflow, audit, compliance, all friendly. So these are our clients. On the other side, we have the issues. Our platform works for the issuer from the big one to the small one, as long as they issue bonds on the capital market. It could be the ones that do a bond a year. You need the data because you do one, you can't mess it up. It could be the ones that do one a week. It's because you do one a week that you need to save that basis point. That data will allow you to do and therefore save money for your shareholders, etc. So two types of client, all of them on the issuer side, the banks on the other side, sort of a natural hedge to the market, to the company.
That's a great response. Yes, one more question for the team. Yes, please.
It's a well-known fact that equity markets are much more transparent, much more integrated than debt markets. So it's a great area to target. I'm curious why this hasn't happened before. Not for banks, not big people, just more transparency. This has been a no-go for years.
Yes, that's a good question, and we get asked about that a lot. I think it's a combination of things. First of all, it's only recently that the fees that the banks are getting started getting compressed, which means that the banks need to do something about it. You cannot have the same kind of cost structure that you had 10, 15 years ago. The second thing is that when we speak to a bank, the second kind of meeting is with the juniors on the desk. So there's a lot of attrition in terms of the talent there. They need to automate things to keep people on the desk, to keep also the business and the clients, right? Again, this wasn't there a few years ago. And at the same time, there's a lot of competition from other parts of the bank. These guys need to modernize, they need to digitalize, and they bring their cost base to aligned with the other parts of the investment bank. So there's a few things happening right now, and as Guillaume said, there's other fintechs in this space, not directly competing, but in this space, which actually creates a lot of momentum. And I think the last thing is that the issuers themselves are asking for a better way of doing deals that, again, wasn't there a few years ago. So it's a number of things happening at the same time.
Perfect. Well done. Thank you very much.
Thank you.
Thank you. So let me show you the QR code again. And the QR code is the same for every startup. So once you open this one, you can provide feedback on every startup. At the end, don't forget to press submit, because then you get a record of everybody's presentation today. So that's important. So now we go to the last presentation of today. Our last fintech company is called Tribe Hive. And I would like to invite Adrian on stage.
Good evening, everybody. Nice to be last. Hopefully the best. We shall see. I have a passion for independent businesses in this country. They are the lifeblood of our communities. The shopkeepers, the plumbers, the electricians, the masseuses. These people really matter. And yet they are hugely disadvantaged in their business life because, unlike major retailers, unlike Amazon, they don't get the best rates for payments. They don't get to pay 3 basis points like Tesco's do. They get to pay 150 basis points for payments. They don't have access to tools at scale that help them market their business. Loyalty and rewards programs only work at scale. Too small, nobody's interested. So we're going to change this space. We are going to deliver a platform that helps these businesses do better business in terms of payments, in terms of marketing their services, accessing their customer base. And we're going to build it in such a way that it becomes a channel to deliver innovation into those businesses on a regular basis going forward. Innovation in terms of fintech, in terms of payment technology, and in terms of marketing technology. I'm going to empower them to compete, and I need your help. The team, Erla and Scott are here today. Gudmundur couldn't be with us. He's trapped in Iceland waiting for the volcano to go bang. We've been around. We've done this stuff, both in senior roles for big corporations, but we've also built startups from the ground up. I can tell you harrowing stories of Erla running around nightclubs in Soho installing payment terminals at midnight. She can tell them better than I can. My point is, we know how to make things happen. Now, the big problem when you try and change this space, and it's a huge problem, is that you either try and sell to individual small businesses, and it's difficult. It's expensive, it's time-consuming, it's terribly, terribly slow, and it's also kind of strange. I actually once tried to sell someone a payment terminal standing in their freezer in a supermarket. It's a challenging environment. How do you sell change to these organizations without having a huge sales and marketing budget? Well, you do it by creating a consumer army. It's exactly the way that the credit card industry was started in this country. Barclays did not sell to merchants, they sold to us, to consumers. We then went and annoyed merchants to take credit cards, and it worked beautifully. So what do you use to recruit your consumer army? Because I sure as hell can't afford to pay them to do this. But what I can do is I can give them cash prizes and rewards based on a subscription they're going to give me each month. I can also encourage merchants to get on board by giving them free payment services. And I can assure you, those are magic words to small independent businesses. I can build an interacting network of people who want to help each other, not just to do better business, not just to see their market, town, village, city thriving, but also to improve customer experience and do really good things in their local community. Doing things that matter to them, especially in terms of green-related causes, which we think is something that's dear to most people's hearts. And we can do it in such a way that the platform sitting at the bottom of all this, the thing we need to build, continues to grow and extend itself into the future, becoming that intermediary layer between millions of individual citizens who love their local community and those businesses that they depend on, and whose survival is key to ensuring that we actually do live in a human community and not just an out-of-town shopping mall. Now, we've been and asked some customers or prospective customers and asked them what they think, because it's kind of scary. They might have said no. Luckily, they didn't. We asked 1,000 people. 74% of potential consumers said they loved this. Loved is my word. I mean, we can send you the market research. They found it appealing. Better still, 27% said that of this. And from that £3 a month, I can do good things for merchants, good things for them, and good things for good causes. Interestingly, because you kind of think this might appeal to late middle-aged, middle-class people who want to look after the local butcher and baker, strongest response was 18 to 35-year-olds. Really strong response. Now, the target market for this is huge. In just the UK, just England alone, you've got 12 million people who are targets for this. You've got 450 towns that are suitable for this. And bear in mind, if you get a town like Guildford, you also get all the surrounding communities. And you've got, in these clusters, the opportunity not to have to sell this the hard way, but to land and then grow out in a viral expansion. The market is enormous. Now, we're beginning in two places. One is my local market town, Tame in Oxfordshire, and you're going to see a little bit more about Tame in a moment. And the other is Guildford in Surrey. These are just two towns with a huge catchment. Each one of these would do us just grand on its own, but we think two is a better way to begin. Our revenue sources are prize draw entry fees, and we've already tested whether the market would go for that. Then we quickly move into platform as a service fee for the merchants to access advertising and to use the platform to deliver their own loyalty and reward schemes into a pre-established customer base. So they don't have to go and recruit people on their own. Then we are already seeing the opportunity for catchment sponsorship fees from retailers like Boots and M&S, who desperately need the high street to survive, need those organisations and the footfall that they create. And after about a year in, once we're regulated as a payment facilitator, we will move into providing payment transactions. I am a regulated individual for the FCA, and we have built several payments businesses in our time together as a team. But more than that, once we're offering free payment transactions for TribeHive members, all other payment transactions will be processed by us for that merchant. And we will charge a normal commercial fee with some subsidisation because we're treating aggregate volume in a community. So suddenly small retailers get the same price as Tesco's. Well, maybe not Tesco's. And finally, I should have said, my apologies, that once we're at this stage, we now have a platform that can deliver any new digital service that you care to wish into this enormous opportunity. This is something like 20% of UK GDP flows through these businesses. That's a very big opportunity. You cannot access it alone through the internet or an app. You need this mechanism to get to them. If we look at it from our modelling, this is just looking at two communities. This is looking at Tame and Guildford, nothing else. And we're looking at a very modest penetration of those communities. And you can see that being related to payments, software as a service, platform as a service, we see relatively rapid cash generation. We need about 3 million to do the whole journey, but once you've done that, you're on the way. But in the short term, to help us get going, we need 500,000. Our current valuation is 3 million. We've put about 300K into this. Most of the initial money will go into the platform itself, and we've done the hard yards working out how to build it. And then possibly more than we're showing here, but we're going to really try hard with the first catchment area. We're going to make this sing and dance. Second catchment area will need less. Third, fourth, fifth, sixth, 20th will need even less. It becomes a viral proposition. So, I'd like you to meet Sue, because I told you we'd ask consumers about this, but what I hadn't said was you're going to meet a potential, she's a business owner in Tame community, she owns several businesses, she's very into green causes. I'd like you to hear from her. And we're going to do some technology stuff. Exactly. This guy on the radio said the other day that we call things technology when they don't quite work properly.
For me, moving to...
Oops. Oh no.
Hang on.
That is not Sue.
It is not Sue. Here we go. Sure. Okay.
Yeah, we're showing the wrong
media player.
Yep.
No picture.
The past few years have been a genuine struggle. For me, moving to Tame felt like coming home. And for the last 10 years, I've been getting to know the people who work hard to make Tame the amazing place that it is. Consumers who repeatedly visit from near and far do want to see Tame thrive and want to help our businesses flourish. The past few years have been a genuine struggle for businesses, including our fitness centre, Rackets. With COVID and the cost of living crisis, we are still living in difficult times. Tribe Hive will help both businesses and consumers. What business doesn't want cheaper card fees, and what customer doesn't love offers and prizes? So now we can all get behind the idea of recycling wealth locally.
Right, it's £15.50. Thank you.
The regular support of great local causes from Tribe Hive would be an easy sell and a highly desirable outcome. I can see Tribe Hive being an effective offering which will be snapped up by everyone in Tame.
Thank you, Sue. Thank you, everyone.
Excellent presentation, and a wonderful video as well, particularly uplifting at the end of the evening. So, thank you. Let's open up for questions. Yes, please, Claire.
I guess one of the most obvious questions, the British Chamber of Commerce, that obviously doesn't do this for lots of businesses. How is your involvement, or have you thought about sort of interconnectivity with them?
Yes, I mean, there's lots of these structures in these communities, the BRC, Chambers of Commerce, various organisations that we can use as corporate sponsors, in essence, to take us through into this marketplace. In most communities, certainly in the UK, the local authority has funding from central government to deliver programmes of this nature. And so in our conversations, the number of ways in isn't an issue. But what you come across is that you see propositions that are really quite simplistic. So business improvement districts, for example, are providing, I mean, one retailer in Guildford said to me, oh, I pay £5,000 a year, I get some plastic bags and I pay for the Christmas lights from it. That doesn't help. It just doesn't help. The challenge is to bring together lots of different thoughts into one space to create the drive for success, because you can build all the tech you like, but if you don't have that mechanism for engaging people, getting them really wanting to do this, and changing what goes on at point of sale, it will not change. So we think the real invention here is that bringing together of these ideas. But yes, channel partners, I mean, I do think the likes of Boots and the cooperative retail, not banking, and M&S will be very effective partners for us. They desperately need the high street to survive.
Great.
Could you take us through a simple journey for a retailer? Because I'm going to see that
Yes, okay. So as a retailer, you'll be signed up, you'll join on using the same app that a consumer joins. You just become a member of Tribe Hive. If you're a business, you get a simple QR code initially. That QR code is something you display in a shop, and you can also stick on the back of your payment terminal. When a TribeHive member comes into your business, they can use that QR code to express how much they like you as a business, but they can also then use it to initiate a payment. And the payment comes through our platform as a payment facilitator. We then settle with the merchant, but we don't charge them any fees for that transaction. We're taking the money for that payment for the cost of the transaction, not the actual transaction itself, from the £3 a month that the consumer has provided. Does that make sense? And then the second stage is to say to the same merchant, well actually, we've noticed that about 20% of your volume is now coming through us, through TribeHive. You can now have a TribeHive payment terminal, so I'm going to hijack legacy tech, and I'm going to use that at point of sale, and now the TribeHive integration can be done through NFC, for example, so it would look very similar to Apple Pay or Google Pay in terms of the customer experience.
Great, yes. Other questions? Yes, please.
Thank you. Well, we're going to start, I'm afraid, and it's, you know, it's possibly I'm trying to atone for my sins in the card industry for so many years. We're going to start using the credit and debit card rails to make sure that we're able to pay the merchant and get paid ourselves. But what I want to do, and I was the first independent MD of Faster Payments here in the UK, I want to deliver instantaneous payments through this platform to merchants, where it's a useful thing to do. So we're going to start with traditional, and then we're going to move into the new things. And I chair something called the Future Payments Forum. I hear lots of startups come up with brilliant payment ideas, and then you ask them, how are you going to sell this to merchants? And their cost of sale kills them every time. I'm going to have a channel they can play with and use and deliver innovation at point of sale in a way that has not been possible to date.
Fantastic, well done. So thank you. One final question, Julia. Yes.
Hey, I think it's a great presentation. I'm just going to speak on behalf of the cynics who are going to be sat here not
Go for
asking
it.
questions. Which is, how are you going to really change like point of sale behavior for customers?
It isn't easy. I've been part of doing it many times before, so as part of the team that run around the world changing us from magstripe to chip and pin. And there was lots of change at that time. The etiquette of payments needed to change. You change it because after about the 50th time you've been asked by a customer, can I use TribeHive here? You find out how to use it and you get on board. Merchants respond to consumer demand, almost nothing else. And if you try and sell to them anything, you know, I mean, look at the hassle we had with contactless. I led the team in the UK that was trying to promote contactless adoption across industry. Nothing worked until, ironically, COVID came along. And then we all start going bip. I'm not allowed to engineer viruses to make things change at point of sale. It's illegal. I am allowed to build this with your help. So what changes this, what makes it powerful, is that ability to inspire and encourage and pay consumers to drive change. And they will. The evidence of the research is so strong. It's surprisingly strong. I hope that, I mean, cynics deserve a place in my heart, because without cynicism, we wouldn't really address the real problems in these things. We see the challenge.
Wonderful, well done, thank you.
Thank you.
So now we're coming to the end of our evening, our official presentation. Let me just go back to the QR code so that you can submit, just scan it in, and again indicate your interest for TribeHive among those options, and then just you only need to type in your name, first name, surname, your email address, and then submit. Press submit at the end, and then you get an email outlining all companies who presented today. So yes, it's a good reminder of who pitched today, and you can indicate which company you would like to be invited to meet them again. And we will notify all our startups by tomorrow, by Wednesday. What I would like to do now, before we go out for drinks, I would like to invite all my startups on stage to give them a big applause. So please come to me. We can do one group photo. Glenn does a group photo of all of us. Yes. Wonderful. So thank you all very much. Well done. And now we start drinks outside. So please join us for more networking and drinks. Thank you.